Today we're covering three topics. The first is what oil might do next. The second is still about oil, but we're just going to talk about some facts and what the future of oil might be. And the third is we're going to review the Bitcoin chart. So I think oil is at an important juncture, and we're right up against the support level. And you can see the support level really started earlier, maybe even all the way back here. But the key of this is we had this big sell-off, and this was actually with the Iran bombing that happened. So there was all this selling that ended up getting stopped right around this level. And so that's what this support line is. Market kind of had moved in a channel up for a few days, and now we're trying to come back down. And we're kind of at a real critical point here where if it breaks below this level, the next support level we have is looking like this. To me, that'd be around 56. So a whole 5 or 6 points below where the market is currently. And if I zoom out more, we can see we're really in a larger trading range. And what this move up to the top of the range was really just a failed breakout above the top of that range. So the market tried to break above, then couldn't. Now we're pulling back, probably wanting to get a second leg off of this. So pull back and then second leg to put us somewhere down here around this level. So the trade I'd be looking for would be trying to go for 2 times your risk and selling below that bear bar. Now, considering we have room down to this support level, I'd really rather try to go for maybe 4 times. Let's see. Yeah, so 4 times puts you basically right down at that level. If you're risking 1 to make 4, that means you have to be right 20% of the time for it to be profitable. And from how I read this, I do think you'd be right at least 20% of the time. Now, I don't usually like to use the geopolitics as a reason to take a trade. I'd rather just rely on the chart itself. But there are some tailwinds for the oil market to go down. Looks like things are possibly coming to an end soon with Russia, Ukraine. There's a good chance the Middle East is going to be calming down soon. So those are reasons that there might be a greater free flow of oil. The supply is just, it's easier to move around. There's less disruption. And that might be what the market is trying to price in here. That's what this price action is. So a couple reasons I like this. One, we're stuck below the moving average. We're below the 20, and we're finding real nice resistance at the 200 moving average. We're below it. It's trying several times to go higher and then can't. So you could consider it a double top or a triple top through here, like I have drawn in. And so what we're seeing this resistance, the bulls are failing, and at some point after they've tried twice, 3 times, they just give up and buy later. So they'd give up on trying to buy here, and they'll just buy, and they'll say, well, it's probably going down here now, so we'll just buy later. And we also have a second entry short. So market's pulling back, bear bar. So the first time they try to short is here, and they fail. Now we're getting another failure by the bulls and a secondary short. So secondary shorts, I can try to get swing trades out of those in a bear trend. And at least on this time frame where we're looking at from this high or this high, then we are in a bear trend. We're below the moving average and we're getting bear bars. So a couple-legged pullback, then decent bear bar like this, I'd like to try to be selling below that. So now part 2 of the video, I wanted to talk about what the future of oil might look like. So the world uses about 37 billion barrels of oil a year, and there are 1.7 trillion proven oil reserves in the world. So by doing the math, you end up about 45 to 50 years before those proven oil reserves go out. Now, we really don't know exactly how much oil. There's also the unproven oil reserves, which might be up to 3 trillion. But just looking at what we know now and what we can grab with our current technology, then there'd be about 50 years of oil left. Now, so what does this mean? Does it mean in 50 years we turn into like a Mad Max dystopian world where we're just fighting over oil? Probably not, although it's not impossible. A lot of countries are shrinking in population, but a lot of places are still growing quite a lot. India will still be maybe 1.6 billion people by then. China will still be large. Africa will continue to grow. United States will continue to grow. There'll be a lot more people in 50 years than there are now. And even with whatever other technologies we might have, like expanding nuclear, anything else we might come up with in the next few years, I don't think that's going to offset the increased demand for oil. So I think we're going to continue to use more and more barrels of oil every year. The world will grow in population and it'll grow wealthier. People will demand more energy use. So I'm not prepared to make a price projection for 50 years from now on what oil would be. But I think it just shows how important oil is as a commodity and how much there's kind of a lower limit to what oil can be for the price. There's always going to be a demand for it and this increasing demand. Now I've talked about it in other videos where oil had actually gone negative in the past, and I have the link in the description. But in general, oil has a lower limit that's going to be not that much lower than where we are now, and there's always going to be demand for it. So if someone was to buy oil, yes, but theoretically it can go negative, but it's not going to stay, it wouldn't stay negative for very long, or right, it wouldn't stay below $30 or $20 for very long. There's an increase in demand for it. There's, I suppose, a limited supply if those numbers are correct with the proven and unproven oil reserves. So what I think will happen is that over the next 50 years, there'll be many instances where oil gets unreasonably low in price and there will be buying opportunities. Are we coming up against that yet? Probably not where it's clearly a buying opportunity, but surely if we go into a phase where oil gets really low soon, like around $40 or less, then I will keep a very keen eye, and I surely, if it gets down to something like 40 or lower, I will surely be placing some bullish bets on oil. So I just wanted to share some of those facts and just kind of put some ideas out there. All right, the third topic of this video is Bitcoin. Now, a lot of people state that Bitcoin will have increasing demand with a decreasing supply, and I think that's probably the case. I'm no expert on Bitcoin. Now, it's different from oil. We know oil is there and we know it's used, and we just can't say that we know that is going to be the same for Bitcoin. The experts say it will be really important. We just can't know. I mean, it can be, quantum computing can hack it. There could be other issues that go on. We just don't know about Bitcoin. But until that either utopian or doomsday scenario comes for Bitcoin, then it's still a vehicle for trading and investing in. The situation we have now is Bitcoin's right around this support and resistance level that's really been here for about a year now. We had several touches that formed the resistance, then we broke above it, and now it's acting as support. Today's been, really this last week has seen some selling for Bitcoin, and we're coming right up against that support level. So the way I've been treating Bitcoin is I hold actual Bitcoin, but I also try to take a few swing trades occasionally. So a few weeks ago, we had taken a trade, and I made a video on this and shared it in the Discord. There was a bull channel forming, and bought right around this area, and got a quick swing trade out of it. So I like to hold Bitcoin, and then I see different setups happen occasionally, and then I try to take those setups. Another thing that I like to do is try to buy Bitcoin on dips. So if I remember when Bitcoin was around 60,000, and I think it had dropped down to like 30,000 and 25,000, and so I was trying to buy it during that time. That was a real nice dip. And so we might be coming near a more minor dip, not quite as major as that, but the more minor dip I'm looking at is going to be somewhere in this area. The first level I'm looking at is basically right where this 200 moving average is. I've talked about this a lot in the past, how important the 200 moving average is. There's many instances on many charts where the 200 moving average holds up really well. Go pull up any daily chart of any market and just go back and watch how the price really reacts to the moving average. Just pull up any chart and do that, and you can study it on your own, and you'll see what I mean. And so we have the moving average. It's kind of this, we have this no man's land right here going down to the moving average. Yeah, we have bars over here, but we kind of have this open space right here. So this area of support at the 200 moving average, plus we have price over here as a level. That's right around 100,000. So we have price at this level, we have the 200 moving average, we have the 100,000 big number. So those are three things that the market probably wants to retest. I think it'd be completely normal for the market to pull back here, probably fairly quickly back to 100,000. And this was a natural area for buying. So anyone that's wanting to buy and hold Bitcoin for a long time, I think we might be setting up for a dip that'll happen here. And this is kind of a minor dip, and that'd be probably a place to buy small and try to add on to whatever you might already have. Now, a more major dip, where I would really start to consider strongly buying more or a lot more Bitcoin, will be down around this 80,000 level. And we see this is at the low of the trading range that we've been in. And Bitcoin has been very range bound lately, but the low of the trading range is right around here. Once again, it's kind of at the bottom of this no man's land. So once the fear has kind of taken over for a while, then it'll probably end and people will start to get more eager to buy somewhere around this 80,000 level or 75,000 level. So far, this has been a trading range and we've failed to break out above it, potentially twice. We need to see more information here to see how this reacts. Maybe this just double bottoms here, and then we end up higher. But if not, then a good chance it wants to come down and test the bottom of the trading range. And so if it does, I wouldn't think that it would continue to break down too much stronger below that level. And if it does get down to 80,000, that would be a 33% retracement from the highs. So you kind of just have several key factors: 33% pullback, 80,000 level, and then this previous support, where I think a lot of buyers would step in if it does manage to get that low. So there's a couple of things I'm looking at. I just wanted to give you guys an update on some of these other markets. I hope everything's been going well. Hope the trading's been good for you guys. It's been nice to be in this bull market where everything just kind of keeps on trickling up. And I think we have a bit more of that or a lot more of that. Either way, I mean, I'm remaining bullish, and so hope everything keeps on going well for you guys, and I'll see you in the next video.